Forget everything you thought you knew about housing markets, because Canada's just broke every rule in the book. Prices are stable or rising, even as interest rates sit at 20-year highs. Demand hasn't cooled, supply hasn't caught up. So how is this even possible? In 2022, the Bank of Canada raised rates from 0.25% to 5% in less than 18 months. Traditional economics says when borrowing costs triple, housing demand crashes, prices fall, and the market corrects. But that's not what happened in Canada. Today, we're breaking this down like a diagnostic. We'll look at the symptoms, identify the root causes, and examine the proposed solutions. And we'll do it with real data, not speculation.
All right, let's dive into one of the biggest, most stressful topics in Canada right now, the housing crisis. We're going to treat this like a diagnostic. We'll look at the symptoms, figure out the root cause, and then check out the proposed cure.
You know, for so many of us, the dream of owning a home was always just part of being Canadian. But lately, that dream is feeling more and more out of reach, replaced by this constant anxiety over prices that just keep going up.
And this isn't just a feeling. It is backed by some pretty stark numbers. For instance, there's new research showing that in a city like Toronto, big corporate landlords are charging rents that are a whopping 44% higher than other owners for pretty much the same kind of apartment. Think about that for a second.
So, what is actually happening here? This isn't just about sticker shock on a real estate website. It's a really tangled problem with a ton of moving parts. To get our heads around it, we need to break it down piece by piece. So here's our game plan. First, we'll talk about the symptom everyone's feeling, this housing fever. Then we'll get to the diagnosis, a huge gap between supply and demand. After that, we'll look at the official prescription, see what's getting in the way of the cure, and finally, try to figure out what the future of homeownership in Canada really looks like.
Okay, let's start with the symptom. This isn't just a Toronto or Vancouver headache anymore. It's a full-blown, nationwide affordability problem, and man, has it gotten worse over the last few years. To really track this fever, experts use something called the Home Buying Affordability Ratio. All that means is it looks at how much of a typical family's income gets eaten up by the cost of owning a typical home. It's a simple gut check. Can people actually afford to live here?
And the numbers, wow, they tell the story. Just look at the change since 2019. In Vancouver, it now takes basically 100% of an average income just to afford an average home. But what's really eye-opening is a place like Nova Scotia. The ratio has nearly doubled. That shows you this crisis has gone way beyond the usual big city suspects.
Okay, so that's the symptom. What's the diagnosis? Well, when you strip everything else away, it comes down to economics 101, a massive, fundamental gap between the number of people who need a home and the number of homes available. So on the demand side of things, our population is growing fast. A Statistics Canada study looked at the years between 2006 and 2021 and found that new immigration was a factor in about 11% of the increase in both housing prices and rent. And of course, that was happening while super low interest rates were making it cheaper for everyone to borrow money.
But here's the real kicker. While demand has been going up and up, we just haven't been building enough houses to keep up. The bottom line is we've been falling behind for years, and now it's reached a boiling point.
So what's the fix? Well, if you ask economists or Canada's National Housing Agency, the CMHC, the answer is pretty direct and unanimous. We need to build. A lot.
But, build more is easy to say. What does that actually mean? Like, how many more? The sheer scale of what's needed is kind of mind-boggling.
To get us back to the level of affordability we had just before the pandemic, the CMHC says we need to build almost 500,000 new homes, 480,000 to be exact, every single year from now until 2035.
And this chart just lays it bare. If we just keep doing what we're doing, we're on track to build around 245,000 homes a year, but to actually fix the problem, we need to be building 480,000. We basically have to double our current pace. That is a monumental task.
But check this out. If we could somehow pull it off, the impact would be huge. The CMHC thinks it would seriously slow down price growth in places like Toronto and Vancouver. And in areas that saw those crazy pandemic price jumps, like Nova Scotia, prices could actually drop by more than 20%.
Okay, so if the answer is so simple, just build more, you have to be asking, why aren't we? Well, this is where we get into the messy, real-world problems that are getting in the way.
A huge one is municipal red tape.
One study found that in Vancouver, it takes over 15 months on average just to get a project approved. Compare that to Calgary, where it's less than 6 months. That extra time and uncertainty adds massive costs. And guess who ends up paying for it? The homebuyer.
And here's the thing. Even if a project does get the green light, it can still get stuck. You hear from people on the ground, like this Reddit user, who points out that with today's high interest rates, getting the money to build is tough. Plus, we've got major labor shortages, so there aren't always enough skilled workers to do the job.
Now, in any public discussion about housing, the topic of foreign buyers always comes up. And a lot of people feel like this Reddit user, that a key part of the solution is to restrict foreign ownership.
But here's a really important piece of the puzzle that often gets missed in the conversation. The government actually did that. A federal ban on foreign buyers has been in place since 2023, and they just extended it for another couple of years. So that lever has already been pulled.
So, you put it all together. We have a clear prescription, but a ton of real-world complications. So, what's the prognosis? If we just stay on the path we're on, where are we headed?
Well, the official forecast from the CMHC is pretty sobering, to be honest. They're predicting the market will bounce back this year, hit its old peak prices by 2025, and then shoot up to brand new all-time highs by 2026, unless, that is, we can radically change how fast we're building.
So it all comes down to this. The gap between where we are now and where we need to be is just massive. Closing it is going to take this heroic, coordinated effort from every level of government and the entire construction industry to completely rethink how we build homes in Canada.
And that leaves us with the one critical question. We know what we need to do, but figuring out how we actually pull it off, how we build faster, smarter, and in a way that helps everyone, well, that's the defining challenge for millions of Canadians.
That's the data behind Canada's housing paradox. Supply can't keep up. Immigration drives demand. Taxes make building expensive. Policies haven't worked. And CMHC forecasts new record highs by 2026. For investors, this means understanding market dynamics. For first-time buyers, this means planning strategically. For everyone, this means following the data, not the hype. If you want weekly insights on Canada's economy backed by real numbers, subscribe to Maple Money Data. We break down what matters so you can make smarter decisions. Thanks for watching. See you next time.